Orders are updated by event-based postings from different SAP application components as they do in Cost Center Accounting or CCA. In FI, you can assign postings of primary costs, such as for external services and deliveries, to an overhead order. In Materials Management or MM, goods receipts or GR and goods issues can result in primary cost postings to an overhead order. In Management Accounting, you have the following options. Posting commitments manually, for which you need to enter funds commitments. Repostings that allow you to post primary costs to an order. Posting of secondary costs from a cost center to an order with direct activity allocations. Recording statistical key figures that are used as the basis for allocations to your orders and for analyzing your orders.
When you post actual costs to a real order, you initially collect the costs in the order. You then have the option of reposting or settling the costs to other receivers as required. If you assign the order to a profit center in the master record, the actual costs are posted statistically to the profit center. You can also specify a cost center when you post actual costs to a real order. In this case, the cost center receives a statistical posting of the actual costs. You can still manage the costs at order level, but the cost information is also available for analysis at cost center level in the cost center information system. When you're posting actual costs to a statistical order, you must enter a real cost assignment object, such as a cost center, real order, or profitability segment. You can then manage the actual costs at controlling object level, and you can analyze them in detail at order level in the information system. To facilitate data entry, you can assign a real cost center to a statistical order in the order master record. In customizing for internal order accounting, you can select one of the following options for the cost center derivation.
You can also use event-based postings within Overhead Cost Controlling or COOM for overhead orders. You can perform these functions the same way as the corresponding functions in Cost Center Accounting or CCA. You can enter the event-based allocations directly on screen. This entry results in the immediate movement of actual costs between the sender and receiver objects. The event-based allocations for overhead orders are as follows. Reposting costs and revenues. Reposting line items. Direct activity allocation. Reposting direct activity allocations. Besides posting primary and secondary costs, you can post statistical key figures to your orders. You can use the statistical key figures as the basis for periodic cost allocations to the orders and for order analysis in the order information system.
A commitment identifies costs that will be incurred in the future for materials and services requested or ordered. By recording commitments as well as actual costs, you can compare funds that you have allocated to your planned or budgeted costs to determine funds availability. You must activate commitment management both in the controlling area and in the order type to create commitment information on an order. The order status must allow the relevant business transaction. You record commitments on your overhead orders by using certain materials management or MM and management accounting transactions. A commitment is recorded automatically when you assign an overhead order to a purchase requisition or PO line item. You can generate a commitment manually by entering a funds commitment in management accounting. A funds commitment in the system represents costs that are pending but that have either not yet been entered in purchasing or the component is not in use.
You can carry forward open commitment values into the first period of the next fiscal year as part of the year-end closing process. For example, you have a PO item that is not due for delivery until December 28 of the current year. If the item is not shipped by the end of the current fiscal year and the PO remains open, you can carry the commitment forward. The commitment is then posted into the first period of the following fiscal year. For performance reasons, the documents being edited are not blocked for processing while you run the commitment carry forward. This can lead to update terminations if anyone in the system is processing orders from previous fiscal years in parallel to the carry forward. For this reason, do not process purchase orders from old fiscal years while the program is running.